Hello and welcome back to the Tungsten channel. Today we're hopping straight into a topic that's pretty much vital for anyone thinking about buying a home: mortgages. Whether you're a first-time purchaser or looking to refinance, understanding mortgages can save you a lot of money and stress. So let's get into the mixer and talk about this. First things first, what exactly is a mortgage? Simply put, a mortgage is a loan you take out to buy a home. It's a big commitment, but with the right knowledge, it doesn't have to be overwhelming. A mortgage typically has two main components: the principal and the interest. The principal is the amount of money you borrow, and the interest is what you paid the lender for borrowing the money. Here's an example. If you have a house that costs £300,000 and you put down a 25% deposit, then you put down a deposit of £75,000 and you're left with a principal of £225,000, and the interest, for example, if it says 10% interest rate, then you'll be paying 10% of £225,000, which is £22,500 per year. Over time, you'll pay back both the principal and the interest through monthly payments. Now, let's talk about the different types of mortgages. The most common ones offered by banks are fixed rate and adjustable rate mortgages, or ARMs. A fixed rate mortgage has the same interest rate for the entire term of the loan, which means your monthly payments stay the same. This is great for budgeting and long-term planning, but on the other hand, an adjustable rate mortgage, or ARM, has an interest rate that can change over time. This means that your payments can go up or down depending on the market conditions. Currently, the market conditions are looking quite bleak at 5% base rate for loans to banks, when in the past years it's been sort of 0.25, so we're looking at like 20x times the lower price within 10 years. Choosing the right type of mortgage depends on your financial situation and how long you plan to stay in the home. If you plan to stay for a long time, such as 25 years for example, a fixed rate mortgage might be the best choice. But if you think you might move in a few years, say 5 or lower, an ARM could save you money in the short term, as banks tend to offer lower rates to begin with and then increase them as time goes on. Next, let's talk about getting approved for a mortgage. Lenders will look at several factors, including your credit score, income, and debt to income ratio. A higher credit score can help you get a better interest rate, so it's worth taking the time to improve your credit before applying. This is because it lets banks know you're less of a risk to them, so they're not going to lose all your money when you can't pay your mortgage. A website you can use to check your credit score is Experian. Obviously I'm not sponsored, I have 12 subscribers, but yeah, I've just seen that advertised, so maybe check that out if you actually do need to improve it. Once you're approved, you'll need to decide on the term of your mortgage. The most common terms are 15 to 30 years. A 15-year mortgage will have higher monthly payments since you have to pay it off all in 15 years, but you'll pay less interest over the life of the loan since you're only paying for 15 years worth of interest rather than 30 years. But the benefit with a 30-year mortgage will have lower monthly payments, so if you're struggling financially now and you're waiting for your career and salary to flourish, I guess, then it's a better option for first-time home buyers. Let's break down the process of getting a mortgage into simple steps. The first being pre-approval. Get pre-approved by a lender to know how much you can afford. You can use a mortgage calculator such as Rightmove or Zoopla. Online, just Google them, it comes up on the homepage. The second, house hunting. Find the perfect home within your budget. Obviously both of these websites have it on already, so you can just look on there or look in real life if you want to. Third, loan application. Submit your application to the lender. This is just going to be your bank, or it's going to be an online one. I know NatWest are doing a decent one at the moment, but you're going to want to change mortgages over time because the interest rates shoot up after the initial 5-year period, which sucks. Fourth, processing. The lender will review your application and verify your information to check you're not using a stolen identity and that your salary is what it is. Fifth, underwriting. The lender will assess the risk of lending you money based on your income, credit score, the things I mentioned before. And finally, closing. You'll sign the final documents and your contract and get the keys to your new home. Very nice. Finally, let's talk about refinancing. Refinancing is where you take out a new mortgage to replace your existing one. This can be a good option if interest rates have dropped since you first got your mortgage, or if you want to change the terms of your loan. I'll do a video on refinancing in the future, so subscribe for that, and like and comment. But yeah, that's about it. Mortgages might seem complicated, but with the right information you can make smart decisions that will benefit you for years to come. If you found it helpful, subscribe and like and comment and hit the bell and share, and good luck finding your new home, I suppose.